success of cryptocurrency, it's reliant in very many ways on the network effect, which is also how protocols and social media platforms and a variety of other things derive their value. And so when it comes to blockchains, the stronger the network effect, the better the security and development enjoys, resulting in an entrenched advantage that gives it an almost insurmountable gap compared to competition. And so when we look at the history of Bitcoin, it's gone through basically 4 cycles of growth. And so far, those have correlated. People can debate how causation plays here, but they've been rather correlated to Bitcoin's halving cycle. And so every 4 years, Bitcoin is pre-programmed to change the number of new coins that are generated every 10 minutes. And so during the course of its almost 13-year history, it's gone through this period where every 4 years is a smaller number of coins generated, but when that happens, when that kind of that difficulty, that new coin generation kicks in, that generally results in basically a supply shock. You could say basically the market had already settled on a certain supply-demand balance, and when that new supply gets cut in half, that has historically led to, or at least been correlated with, a price increase, and that has often resulted in periodic bubbles that capture media attention. Then there's a correction. Bitcoin frequently has been labeled dead, but then it recovers and continues on going forward. And so it's been rather volatile. But when we zoom out and look at this logarithmic view of the price, it's actually been the steady state of increases. And of course, the big question is, how long will this continue? Will this reach a certain plateau of multi-trillion-dollar asset and go up from there? Or will this eventually roll over and be surpassed by either some other technology, or will the whole space just no longer be effective? And most signs point to that the network effect continues to be extremely strong, and we're going to walk through some of the steps here. And so overall, Bitcoin's irreplaceable attributes largely rest on 3 different categories. So there's security, scale, and decentralization. And so they all play into each other as well. So security can help increase its scale can help increase its security. But basically, when we analyze the qualities of the network, we can go through these 3 areas. So of course, Bitcoin has the largest market capitalization, with estimated to be well over 100 million users at this point. And that includes on-chain users as well as users on exchanges or other providers. And so if that number is correct, and many estimates have pointed in that direction, that means Bitcoin has so far reached a higher level of adoption than the internet did by this point in its life cycle. And so it's being adopted very quickly. It's the fastest asset to touch $1 trillion market capitalization. And then when you include not only the base layer, but also additional layers like Lightning and Liquid, as well as various side chains or other things in the ecosystem, and then all the variety of apps and hardware devices that are either Bitcoin specific or Bitcoin first, kind of focused on Bitcoin. It has one of the largest overall networks in the blockchain space. And again, the more development that goes on, the better and better the system gets, and the bigger that gap becomes compared to the other blockchains in the ecosystem. And so when we look at, for example, hardware wallets, so there's many hardware wallets that accept multiple different coins, but then there are also hardware wallets that are Bitcoin only, that only work with Bitcoin by design to enhance their security and be more specialized. And so what that ultimately means is that, for example, Bitcoin has a greater range of hardware selection than other coins in the space. And that also applies to, there's a variety of apps that only work with Bitcoin. And so in many ways, Bitcoin's ecosystem overlaps with the broader crypto space, but also has a very own dedicated Bitcoin-focused part of its ecosystem. And so when you include all these different layers, Bitcoin's development network is very, very big. And so basically, to summarize, we can compare Bitcoin to MySpace, because that's an often way of thinking about it among investors that are maybe cautious about wondering if Bitcoin is going to be displaced or not. And so MySpace, of course, is a well-known example of a social media network. It launched shortly before Facebook, but it was eventually surpassed by Facebook, a later competitor. But there are some differences to be aware of. And so, for example, Bitcoin reached $1 trillion market capitalization and continues to be the leading cryptocurrency almost 13 years into its existence, whereas MySpace reached a peak market capitalization of about 12 billion 5 years into its existence, and then was surpassed, and it quickly fell in market capitalization. And so, Bitcoin has already reached a level of scale and basically market dominance that is very different than MySpace reached, and for a longer period of time. Another difference is that Bitcoin came after BitGold, Hashcash, and B-Money. So it's not the first one to do what it's done. It's just the first one that put enough pieces together in order to achieve the wide success that basically paved the way for all these other cryptocurrencies. And so it's not necessarily the first or oldest technology. It's actually, when it came, it was actually, relying on, at that point, decades of prior work. And then lastly, as we said before, Bitcoin is largely following the path of a protocol rather than a company, whereas many other blockchains in the space end up looking more like a company in the sense that they're still very reliant on their founders, still very reliant on a centralized development team, whereas Bitcoin at this point is more distributed. And so whereas MySpace, of course, as a company, it followed the path of company, it had an early management change early on, and for example, they were slow to adopt to the shifting user base towards mobile phones, and so that was a key reason why they eventually fell to later networks. Whereas Bitcoin continues to optimize exactly what it tries to optimize for. So basically, it's the fact that there's not that many features on the base layer is again by design, and so it's not being surpassed in terms of technology by other protocols. It's not being overcome by later developments because every one of those developments comes with trade-offs in a way that Bitcoin has that ecosystem has chosen not to adopt, at least not on the base layer, in order to ensure some of those prior attributes of security and decentralization. Part of Bitcoin's success, in addition to being a well-designed protocol, is the path dependence. It's very, very hard to replicate Bitcoin's unique path dependence at this point. And so what I mean by that is Bitcoin was made by a creator that was, eventually left the ecosystem. He remains unknown, or they. And whereas many other cryptocurrency projects they take more of the path of a company, where they generally it's harder for them to achieve a level of decentralization, and it's harder for them to basically follow this very, very decentralized path that Bitcoin's gone through. It's very hard for them to distribute their coins in a fair way, and it's very hard for them to achieve the scale and the adoption that Bitcoin has. And so as full disclosure, I am long Bitcoin, I own Bitcoin, and I also advise some Bitcoin companies. But one thing I like to point out is that my research company focuses on multiple asset classes, and so I'm not tied to any one asset, and I'm happy to look at multiple different asset classes, both outside of the cryptocurrency space and in the cryptocurrency space. And that's why in many ways I've continued to focus on Bitcoin, in my view, as the primary cryptocurrency that offers a lot of value and that is unlikely to be surpassed anytime soon by a technology superior blockchain.